Hello and welcome to Founder Money. It's Connor here. Today we're bringing you something a little bit different. This is the start of our new video podcast series on businesses. And today, if you're a family friend or well-wisher of ours, you might notice my guest on the show. It's my brother Martin, ex-business partner of mine. And now that we've gone our separate ways, he's doing his own thing and I'm doing mine, which is this channel. So before we get into anything else, bro, how are you keeping?
Keeping well. Thanks for having me. Absolutely delighted to be here and looking forward to catching up. It's terrible that this is the only time we get to catch up.
I know. Like seeing each other for 13 years every day nearly to not these days. It's a big change. Change for me too, don't worry.
Yeah, indeed.
So, bro, what are you up to these days?
So I suppose, obviously following a business sale, I have... First thing you want to do is obviously try and invest the money and play smart with it. So, the big thing for me was to get into something that I enjoy and something I'm passionate about. And I have founded a company called Lofty Property Investments. So that's kind of what I'm at. Done it without you, yeah. Skipped on and pushing on and yeah. But here, listen, it's in its infancy, it's early days. So just getting things kicked off and getting it going. So
brilliant. Why property, bro?
Well, I suppose, as I mentioned just before there, obviously following a business sale, you want to try and make your money work for you as best you can. Back in 2008, I made probably one of the worst property deals, unforeseen property crash coming, bit young, early 20s. And I suppose since then, I've been educating myself over the last 12, 13, 14 years. Just to ensure nobody, I don't make the same mistake again. And between books, courses, YouTube, you name it, and I suppose just I'm really righting the wrongs.
Brilliant. So Lofty Properties, then, what do Lofty Properties do? What is the business?
Okay, so Lofty Property Investments Limited, it's the title, really has sort of three strands to it. So three strands being, first one, I'll invest with my own money. Okay, so that's kind of nice and easy, nice and simple. Second strand is I'll work with investors' money, people who maybe are cash rich but time poor. And they obviously want to make their money work a bit better for them than maybe they're achieving in the current banks. So that's strand two. And then strand three, which is something I'm quite passionate about, is sort of education. So, educate people, like-minded people who maybe want to take a first step into the world of property investing. So
brilliant. And for me, who has just a periphery knowledge of property investing, what does that mean?
So property investing is really no different from investing in anything, stocks and shares, anything like that. I mean, it's a long-term growth thing. It's a capital growth thing. The big advice we would give people is to sort of buy and hold. Now, again, it really depends. There's numerous different strategies, and not one strategy will fit everybody. So there's many different strategies, from buy to let to flipping properties to Airbnbs to HMOs, tons of different strategies, and a lot of it will suit certain people, and a lot of it will, a lot of different people will go down different avenues. So it's but really it's not a pile different from any other form of investing.
Well, look, tell me about Lofty at the moment. What type of properties are you working on at this time?
So currently, my plan really is just to work on a flipping strategy. So that kind of goes against what I'm teaching people in terms of buying and holding. But I suppose over the last 3 or 4 years, I've been working on building my own portfolio up, which are a range of buy-to-lets which I've bought, which I plan to hold long term, and they're cash flowing well. But just with interest rates on the rise at the moment, market a little bit unsteady, I kind of just going to focus the next year or two just on flipping projects. So kind of getting in and getting out and making a profit and removing myself from it. I feel it's a wee bit safer. But it's like anything, whenever you're investing in property, it's always good to have 2 or 3 avenues out. So for example, the properties I'm buying are slightly lower value properties at the moment. So that, there's maybe anywhere from 30 to 50k profit in there. But at the same time, if the market was to dip and I had to hold it long term, it's no great issue. So
if you had to hold it long term, what would you do with the property to make money?
Okay, so the big thing that you want to do there is obviously if you're buying the house below market value, okay, so let's talk, for example, you buy a house at 100,000, sorry, the house is on the market at £100,000, but you were to buy the house for £75,000, okay, and by the time you refurb the house and increase the value, the house may be worth 130, 140k, okay, and really what you want to do there is refinance at that stage. So that, most banks are offering a loan to value rate of 25%. Okay. So at that point, you're actually refinancing 75% of that higher value, okay, of 130k. So you can actually draw a majority of your money out. Okay. So it's debt. Okay. But you hear a lot of people talking about good debt and bad debt, bad debt being your credit cards, your car finance bills and whatever else. This is no different from any business where people borrow money to buy something to make money. And that's kind of what we call good debt. So it's just about managing your cash flow in there and making sure that there's a profit in the middle. And really what you should end up is an asset that's cash flowing and making you a monthly profit, but also something that's going to go up in value in 10, 15 years. We've all heard about a granny who has bought a house for 25 grand, right? Okay. People thinking, my goodness, how did that even happen, right? I can imagine in 20 years, we're going to be talking and saying, my goodness, do you remember you could buy a house for 150 grand, and that's what's going to happen. So that's capital growth. And that's why you want to be in for the long term.
Cool. So you buy a property, you fix it up, and you can either flip it or sell it at that point, or you can let it out. Is that generally the main strategy that you're working to at the minute?
Main strategy that I'm working on just at the moment, it's nice and easy. I'm actually still involved in the business that we sold it, so I'm quite time poor at the moment. So so for me, it's a basic and it's an easy strategy that I can get involved in. Huge aspirations to get involved in commercial to residential properties, where you basically buy a commercial property and flip it back into a residential sort of state. Okay, but also as well as that, HMO conversions, where I've doing a bit of training at the moment, where you could maybe turn a 3-bed house at the moment into maybe a 5 or 6-bed house with en-suites, etc., sort of reposition the shape of the house.
Just imagine that would make more money with a HMO like that, where taking 3 bedrooms, making it 6 bedrooms, there's bigger potential for more income.
Absolutely, you and that's what it's all about. It's all about maximizing your return for the property that you've bought, and you got to get a bit creative with it. You gotta go in with an eye and look at a 3-bed house and think, well, how the hell can I turn this into a 5-bed house? And it takes a wee bit of a creative edge, but it can be done.
So look, if I was looking to get started in property today, and I like the sound of what you're talking about, and I'm looking at a property that I could maybe do a little bit of work to, that I could maybe rent out on the other side of that, how would I go about starting to look for that type of property? And ultimately then, when I find one or two of them, choosing the right property? Yeah,
okay. So I mean, it's like any business decision. It comes down to the financials. It comes down to the price of the property, the area of the property. I mean, there's 5 or 6 golden rules that you wanna live and die by in property, especially when you're investing in property. For example, you want to make sure that you're buying in an area where the rental market's quite strong. That you want to buy a house that could potentially cash flow quite well. For example, you want to buy in an area where there's busy bus routes and busy train routes in and out of the city centre. There's going to be high demand for that house. You want to make sure that you're always going to have a bit of a contingency in your, just in, a bit of a buffer, a cash buffer, just in case things go wrong. But in terms of you're saying about getting started, if you were looking for a house, I mean, really what you want to be looking for is, especially if you're new to the game, people think that you have to go for these almighty wrecks, and kind of a bit worried about, my goodness, there could be maybe bitten off a bit more than I can chew here. But really what you're looking for is something that's in good condition, something that would maybe an older person's maybe unfortunately passed away in, and something that just needs the aesthetics of the house changed and tidied up. So basically it's all cosmetic, okay? New kitchens, new bathrooms, but it's like anything in business. It's about buying cheap and selling high. So if a house is on the market 100, you want to get that house, maybe if it's fallen through 3-4 times,
Yeah.
and all of a sudden your your 70 grand offer is quite appealing. Okay. You might not get that on the first time. You might not get it at the second time, but maybe on the third time of asking, you're looking to buy off a distressed seller. Somebody who can't get their house sold is usually distressed. But it's like anything in business, you buy cheap, you sell dear. And that's...
You mentioned there distressed sellers. What other types of distressed sellers would you find?
Yeah, I mean, believe it or not, and it's sad, it's in the world that we live in, and probably more so relevant at the moment, but I mean, people in financial difficulties, people going through divorce, people going through marriage breakup, people, unfortunately, family members passed away and the remaining members of the family need the cash and they need it quick. There's more and more distressed sellers out there than you would actually imagine. And you can look on it a number of different ways, but they need out of that house and they need out of it quick. So really you are a good solution to them, and if you can, it's all about moving fast when you see an opportunity, and if your financials stack up, you jump at it, don't.
On the other side of that then, so when it comes to, if you are on the other side, the distressed seller side, you're looking to get rid of your property quickly, but from the buyer side, how do you then find those properties? So, is it marketing, or is it just going in, knocking doors on estate agents, or is it all of the above?
Exactly, all of the above.
Okay.
It's a bit like anything, our background in our previous business, you and I would have been selling, out and out sellers. Would have spoken to everybody, sold everybody, and we would have circled people and we would have communicated with people and we had opened up doors and relationships. It's kind of very, very similar to that in that you're selling yourself and your services to people, to estate agents. So relationships with estate agents is key. Power follow-up, staying in touch, in front, out of sight, out of mind. So if you're staying close to these guys, let them know you're looking for opportunities. There will be opportunities that will arise and will come your way. Alternatively, marketing your services, door-to-door calls, mail drops in specific areas. What you'll actually find is that you need to know your market area inside out, because you need to know what the high-end value of a property is in that area. Okay. So whenever you're stacking a deal, basically what you want to know is if a house would make £200,000 in that area, what you'll offer for that house is minus the refurb costs off the 200. So say your refurb costs are 50k, brings you back to your 150, minus your profit off that, say for example 30k. That's then the price that you offer. So you need to know your area inside out, know what the high-end values are. So you'll tend to find that your market area is quite small, which allows you to market very easily to it. So.
Okay. And do you knock on estate agents' doors? Is that something that you find works? Is it making relationships there? If I was to talk about our skills, we were salespeople and we looked after our customers incredibly well. But what if you're not a salesperson? What if you're not somebody who's in customer service? Are there any other skills that, can anyone do this?
Well, it's like anything in business, right? Okay. I would always advise people, if you can't sell, you got to learn, right? And in this game, you're actually selling yourself, okay? So in this game, you are building relationships with estate agents, building relationships with potential vendors. You are selling yourself and the services that you offer. And the services that you offer is that you can potentially take a house off their hands as quickly as possible. You can manage all their conveyance and you can do whatever you can offer whatever service you want to try and push that sale through as quick as you can. But it's building relationships. It's showing them your credibility. It's showing them that you're able to move fast. It's what do estate agents want? For example, they want to sell the house, right? And they want to sell it fast. So they're the guys that you don't really want to mess around. If there's an opportunity, know your numbers, do your numbers, stack the deal, get it closed. There's many a deal I've had a phone call and within less than 24 hours, I've had the deal closed, and you just got to trust your gut and move. But it's like anything in sales, move at speed,
Yeah, absolutely. Well, look, there are going to be some challenges, and there's challenges in every business, but in property and in that property purchasing, property refurbishment, and property ultimately then either letting or sale, what are the challenges that you have to overcome now with Lofty?
I suppose for me, one thing that I've learned over the last lot of years is that the property game is a slow game, okay? And in comparison to our previous business, which was 150 miles per hour.
Excuse me.
Our business. But I find that the whole game of property is quite slow, and that's taken a fair bit of adjustment from me. For example, if you're running 3 properties a year, you get 3 windfalls per year. Okay, so you're always waiting on realizing your profits, and capitalizing on the wins. It doesn't come that often. But it's obviously a bigger financial windfall. So that's something mentally you have to get your head around. In terms of the actual project itself, where do you start? You become a problem solver, but again, it's like anything, business to me is quite simple. It's about managing your costs. It's about managing the people to do the jobs correctly. It's about pulling it all together and kind of keeping the orchestra going, and it's kind of pushing it along. If you can do that in there, you'll just find a sweet spot where you make a bit of profit. And
I got to stop you as well, because I've known you your whole life, and to see you with a high vis vest, a hard hat on, and knocking down garages is comical to me. But
and for me, that's what I'm enjoying. I mean, I'm a pen pusher, okay, and I suppose I'm on this journey of showing everybody that if a pen pusher like me, who couldn't put a picture frame on the wall 4 or 5 years ago, can do this and make money at it, well, anybody can do it, And I suppose, for me on this journey, a lot of the education that I'm going to be doing is educating people to sort of believe in themselves and realize that if Marty McAuley can get involved in property investing and make a few quid, anybody can,
And do you find that is a big point to overcome for most people? It's that mindset that they can't do it, or they're unsure of what to do.
I was involved in our business alongside you, and we built it up and we sold the business. We were one, and there's a lot of hard work, but there's a lot of luck involved in that, right? I've then started Lofty Property Investments. Do I still get imposter syndrome? Absolutely. Do I still ask the question and say, why me? Why have I done it? Why not somebody? Absolutely. People get that. I'm only human, but it's when you can overcome that and just go for things. People have got to realize that, I'm no rocket scientist. I'm not the smartest guy in the room, but I'm good at maybe surrounding myself with the right people to get stuff done. You don't have to be the smartest person. You just have to surround yourself with the right people who can get stuff done. And and in there, that's where you get your sweet spot and you make that profit. And so I mean, you just got to have a bit of belief in yourself, and there is a lot of just go for it, just dive in with 2 feet. As long as you're making calculated risks, you shouldn't go wrong.
Good. So finding suppliers, trying to find tradesmen over this last couple of years has been hard as well. And you and I don't necessarily have those trades as skills in our history. As you said, we're pen pushers. But have you found, building those relationships easier or hard, or finding the right type of people, especially in Northern Ireland? Everybody's busy at the minute. What has that been like?
So I suppose for me, again, it's just relationships. So it's the minute you start throwing yourself into this space and, through social media channels, I've been putting myself out there. This is what I'm doing. People want to talk to you. People want to help. Generally in NI, people are helpful. They want to help you, and I've had numerous people offer their services. Even Brilliant. Today, I had somebody reach out and say, look, if you ever need any paving done, I'm your man, loving what you're doing. And, but that's lovely. I mean, I don't know that person, a guy called Joe. I don't know that guy from...
Do you want to shout out his business?
I actually can't remember his name. I'll just look it up here now. Give me 1 second. He messaged me today. Let's just check. J. Doon Servicing. But that man reached out to me today, and Joe said to me, Marty, if loving what you're doing, if you ever need anything at all, give me a shout. Let me tell you, that's lovely from Joe, and price-based, Joe will be getting all my resurfacing work, because at the end of the day, he's had the decency to reach out to me. So you get a lot of that in Northern Ireland, right? And friends and family and people have recommended. Now, don't get me wrong, I've burnt through a few tradespeople. Okay. Some people not turning up, some people not turning up on time, some people messing around, and at the end of the day, I can't do business like that. So I've burnt through a few, and but I've kind of found myself a nice little power team at the moment that's working well. And you really in this game only really need a handful of people that you're going to use all the time, and then you'll pull in different sort of services and suppliers as required. So.
Great. So we've bought our property at the right price. We've refurbished it with our power team there, and now we're putting it on the market to let. Now, again, we would have marketing skills, but marketing properties are very, very different, and it takes a lot of time, I imagine. But so how do you remove you from that equation, and how do you help yourself to get the best tenants in?
Yeah, well, again, for me, I can't be an expert at absolutely everything, right? So again, it's about pulling in the right people. For me, a big thing that we feel that we're doing a bit different is we stage the homes. So my wife and I would stage the homes to, they're sitting absolutely perfect, okay? In the areas that we're investing in, usually young families want to come in, so we're making them nice and modern and things like that. And then, I can nip in and take photos on my phone, or what I can do is bring in our good friend Richie Lowry from Phantom, who's absolutely amazing. He's a photographer and mainly just works in this industry.
Yep.
And at the end of the day, a picture sells it. So I have to say, worth every penny you spend on it. And Richie will come in. He'll then obviously pass that over to the guys, Property Pal, whatever agent that you're working with, to get it up online. Yep. But as we all know, the rental market is super hot at the moment, and you're still getting 30, 40 people to view a rental. You feel so sorry for people who are trying to get into a rental home, because they're literally, the demand is through the roof, and the prices are reflecting on that as well. So it just there's a sense that NI's kind of following Dublin a little bit. It's not there yet, but but prices are just going up, and they just keep going up.
And there's been some changes from what I know, in the whole rental schemes at the minute. Not rental schemes, for rental businesses. Is it you have to now become a limited company if you have a certain number of properties because it's more tax efficient, or is there something there that you could talk about as well?
Well, funny, I see a lot of people online, and I was actually creating a post which I haven't posted yet. It will go up in the next few days, but a lot of people get hung up on sole trader versus limited company in this game. Should I open a limited company? I don't know what to do. People get so confused. And I suppose my question to those people is, A, are you an accountant? No. B, are you training to be an accountant? Likely not. Okay. So what you need to do is employ a good accountant, and at the end of the day, you and I have both worked with the same accountant for 13 years, and we hold him in the highest regard. He's absolutely excellent at what he does.
Absolutely.
Again, keep him on your right hip. Every big financial decision, the guy gets a phone call. He is educated. He's well trained. He's well versed in this industry. So every big decision, he's on my right hip, and I contact him. I don't claim to be an accountant. I know all the basics, and I know I know certain moves to make here and there. But I don't get too hung up on trying to figure out. And most recently, we had a conversation. He said, "Right, Marty, the strategies that you're working with, the other forms of income that you have, the salary that you still have from your previous business, this is what makes sense for you. But my situation could be different from yours, and it'll be different from Joe Blogs, and it'll be different from the next person. So again, not one size fits all. So that's kind of why it's important to have him sitting there as close as you can. So
brilliant, right? So if I am sold on property redevelopment here, and I want to go into buy to lets or to flip houses, what are the challenges that might trip me up as somebody who's new in this arena? Well, what do I need to look out for?
I suppose the big thing there as well is whenever you're buying the house, it's actually very similar. Okay, so you're trying to buy below market value from a distressed seller. Okay, and you're trying to buy within a certain price range that you're going to have a few different avenues out. Okay, so for example, you don't want to buy a £400,000 house because your rental return on that's not going to be a whole pile better than maybe 100 or 150 grand house. Okay, so you want to make sure that you know the area that you're looking in terms of price range. Okay, where the difference between the two comes in is in relation to your refurb. Okay, so for example, a buy to let, really what you want to do is just polish the house up a little bit. Maybe a lick of paint, bit of carpet. Make sure the kitchen's in good condition. Make sure the bathroom's in good condition. But it maybe doesn't need to be at anywhere near the level that you would work on if you were flipping the house on. So it's a very basic refurb. So it can be done a lot quicker, and it can be put on the market real quick.
Okay.
So, and the reason for that is you might have a tenant in there for 5 years. Will they love that house like it was their own? Probably not. Okay. And in 5 years, you're probably going to need to carry out a full refurb if you decide to sell the house on. If you're flipping the house, you'll probably want to go the whole hog, have it have it sit in stage. You'll maybe finish it off with a few more feature walls. You'll spend a bit more money on it because you want somebody to be able to walk in and love that as their own home. So there's different strategies for both. Pitfalls.
Okay.
Where do you start? You'll run into all sorts of difficulties. You become chief problem solver, but I think you get that in any business. I'm trying to think of some issues that I've ran into. For example, I was selling a bungalow in Lisburn there recently, and bit of paperwork needed tidied up near the end, which held the sale up. The sale actually then fell through because the individual's mortgage expired. So you learn things like that, and you learn, okay, well, I'm not going to make that same mistake twice. Luckily, the next buyer came along, moved along. They were a cash buyer. It was a lot easier. Sometimes it's easier selling it the second time round.
Would you rather have it the second time round, or would you rather sold first and foremost?
You'd rather sell it first and foremost. However, whenever you're buying it, you'd rather the second time round. Okay. And the reason for that is first time round, they've probably got full asking price. Second time round, they're a bit more distressed. They need to sell. Your 15-20% below asking price is always better for you. So somebody once said to me, when you're buying, it's often better to buy it the second time round. And that stuck with me.
Very good.
So,
so tell me, what's next for Lofty Properties? If we're sitting here a year from now, 5 years from now, or 10 years from now, where is the business going to be?
Well, I have to say, being a pen pusher for the last 13 years and kind of getting involved in property investing over the last number of years, I'm really enjoying the hands-on, knocking down garages, knocking out curb edging.
I saw that video on Insta the other day.
I'm finding it hilarious. I'm loving it. I'm loving the different dynamic away from the office environment. And don't get me wrong, our office wasn't the most corporate environment anyway. It was quite relaxed and chilled out. But working on a building site is completely different. It's a whole new dynamic. So I'm enjoying that. So I will continue to flip and invest in my own buy-to-let portfolio with my own personal money. I'm obviously speaking to a few investors at the moment who are looking to come on board, so I'll continue to work on that channel as well. Because at the end of the day,
so tell me a little bit about that, would you, please?
Yeah.
So if you're an investor,
so for example, you want to invest in property, okay, but you're maybe not 100% sure about which avenue to go, okay. You're maybe a little bit unsure about the market. You're a little bit unsure about buying. You're a bit, alternatively, you maybe don't have a lot of time to get involved. Yeah. And say, for example, you've £150,000 sitting there. You can do a number of different things with it. You can invest in stocks and shares. As we all know, you're best to diversify. So maybe you already have money on that and you want to get into property. So you can stick it in your bank and it'll make a poor interest rate. Or the way most investors work in this game is they'll invest money in something like myself. For a fixed return inside 12 months. So, for example, maybe the general rate seems to be 8 to 10%, which is a great return on your money.
Of course.
And basically, what I would do is take your money and walk you through the whole process, invest that into a house, which we maybe flip on, okay, and then you will get your cut of the profit in your 8 to 10%. And my share comes my way for doing all the work and finding all the property. So it's a bit of a profit share, but it's an agreement. A solicitor's agreement's all drawn up and in place.
Very good.
And I suppose based on the track record, I would show the houses that I've done in the past, the profit that's been made on them all, and really that's the relationship. So again, it's just one built on trust, and it's somebody's going to invest their money in me. But it's like anything, I could have me or anybody doing this, they could have millions of pounds in the bank, but in a matter of time, in a matter of working on 5 or 6 projects, you're out of money. Okay. Yeah. And so there's only so far your money will stretch in projects, and as the project get bigger, obviously it doesn't stretch as far again, and that's why a lot of people do this and work with investors. So that's kind of that.
And sorry, just to clarify for myself then, because they'll get a fixed return of 8 to 10%, generally speaking, on the money that they invest, or do you also do deals where you're working beside the investor so that they get a different percentage share?
You can do a profit share. So
that's what I meant.
So another way you could do it is you could agree a profit share. So for example, that they could front the £150,000 and we could go out. I could source a house in around 100, with maybe a refurb cost of 30 or 40, giving us a wee bit of a contingency in there, and we could work it on a we could agree on some sort of profit share. For example, a recent flip project I completed netted me £48,000 profit. So you could agree, that could be a 60-40 split, a 50-50 split, whatever, so you can always come to some sort of agreement with somebody to try and, but no one deal will look the same as the next deal. And it depends who you're working with, what your relationship is with your investor, and how that deal gets structured. So.
And what they're bringing to the table as well.
Exactly.
Yes.
Yeah, that's really
Brilliant.
it, so. Yeah.
So you've got your own properties, you've got properties that you're going to partner up on with investment. What else is coming up for you?
So the big thing for me, and I suppose equally as exciting, I'm really enjoying knocking the garages down and stuff, but I suppose even throughout our business, I've always loved coaching our team to do better and to be better and to invest in themselves. And I suppose a big part of my journey, which, at the moment I'm working on some education packs, property education packs, this is all new to me, this business, so I'm kind of growing going to build a website out, which will have these packs on offer on the website. But what I'd really love to get into is sort of like 1, 2, 3 day education type courses, small group education, where we can bring a load of like-minded people together. I can share my property journey, I can share the stories, and basically give them a startup pack as to how to get into it, how to get going, because finding the first deal, and I remember it, finding the first deal is the hardest deal to find. You're scared, you're unsure, and I suppose I just want to instill confidence in groups of people that, to know what a good deal looks like, and how you then structure how you work through the whole process, from conveyancing, from gaining a mortgage to how you remortgage, because a lot of these terms are alien to people, and a lot of, at the end of the day, how to manage a refurb, how to insure it, tons of different strategies, how to make sure that you're ticking all those golden rules to make sure that, that no matter what happens in the market, well, I'm still going to be safe, and that's a big area that I'm going to be passionate about and going to be working on over the next sort of 12 months. So.
Brilliant. And what's your website, bro?
So loftyproperties.co.uk. So if you'd like to get just jump online, get a look at that. That explains sort of everything about the 3 strands of the business, and contact form on there. So if you want to get in touch, feel free to reach out.
Brilliant. And how can we find you online elsewhere?
So social media, mainly just running through Lofty_properties on Instagram at the moment. You'll get to see garages coming down. You'll get to see walls getting knocked down. And you'll be able to find me on there and keeping everybody updated on the progress.
Very good. And is there anything else before we finish off that you want to say or direct us to any other places?
No, listen, just delighted to be here, and it's great to get chatting with you about all things property. And at the end of the day, just trying to be a real person, showing people that they can do this as every bit as much as I can. And I'm not the smartest guy here, but if I can do it, anybody can do it, and that's really what.
There's only 2 of us on this call, so that must mean I am.
Well, here, but listen, I suppose what I want, I'm trying to normalize business to people and make them realize that you don't need to be extra special to run a good business. Yeah.
No, and like the universe is not going to wake up one day and realize your greatness. You have to go out there and do it for yourself and take it for yourself. And, that first step, as you said, is the hardest. But with somebody guiding you, coaching you and bringing you forward, it makes it a lot less scary.
And if you're doing something that you're passionate about, something you enjoy, that's half the battle.
Absolutely. Well, we got through 13 years of it.
We did indeed. Yeah.
Very good. Well, look, we'll wrap it up there, bro.
Yep.
So thank you very much. Thanks for being the first guest on this new and yet unnamed podcast. I will probably see you at Mum's tomorrow night.
Thanks for having me.
For everybody else, I'll see you on the next video. Thank you, bro.
Thanks for having me, guys.
See you later. Bye-bye.
Bye-bye.